Hey, what's up everyone? Welcome back to 1 in a Million, your go-to crypto education channel. If you've ever looked at a crypto chart and thought, what on earth am I looking at? Don't worry, you're not alone. Today, I'm going to break down how to read crypto charts like a pro, and we'll dive into some key technical analysis tools like chart patterns, moving averages, and the RSI that can help you make smarter trades. Whether you're a complete beginner or just looking to sharpen your trading skills, by the end of this video, you'll be able to read and use crypto charts to spot trends and make more informed decisions. Let's get started. Here is step-by-step Expo 1. Understanding crypto charts. So first off, what exactly are crypto charts? At their core, these charts are visual representations of price movements over time. You'll mostly see candlestick charts in the crypto world. Each candle shows the opening, closing, high, and low prices within a specific time frame. Green candles mean the price went up during that period, while red candles mean the price dropped. Easy, right? 2. Chart patterns you should know. Now, let's talk about patterns, because patterns are powerful. Some common patterns are head and shoulders. This signals a reversal in trend. It looks like, well, a head with two shoulders on either side. Double tops and bottoms. These patterns suggest that the price has reached its peak or bottom and might be about to reverse. These are just a few, but once you spot them, they can be great indicators of where the market might be heading next. 3. Key indicators, moving averages and RSI. Now let's move to some really important tools, indicators. Moving averages. Moving averages smooth out price data to help you see trends more clearly. The 50-day and 200-day moving averages are super popular. When the shorter MA crosses above the longer one, that's called a golden cross, signaling a potential price rise. RSI, Relative Strength Index. The RSI measures whether crypto is overbought or oversold on a scale from 0 to 100. If it's above 70, the asset might be overbought and ready for a pullback. If it's below 30, it might be oversold and ready to bounce back. 4. Using indicators together. Now, the magic happens when you use these indicators together. For example, if the RSI is in the oversold zone and the price is nearing a support level, it could be a good time to consider buying. Combine these with chart patterns, and you'll have a much clearer picture of the market. If you're finding this helpful so far, don't forget to smash that like button, hit subscribe, and drop a comment below. Let me know if there's any specific indicator or chart pattern you'd like me to cover in more detail. Final tips for beginners. To wrap it all up, here are a few quick tips. Don't rely on just one indicator. Always confirm your analysis with multiple tools. Practice makes perfect. Use demo accounts or small trades to get comfortable with chart analysis. Keep learning. The crypto market evolves, so stay updated with new patterns and indicators. Alright, that's all for today's video on crypto chart reading and technical analysis. Thanks for watching, and remember, you're 1 in a million in this crypto journey. See you in the next video.